Hello, this is Rachel from Kalkinemedia. Please subscribe to our channel and press the bell icon for notifications for our latest videos. The ASX SPI 200 futures are the benchmark derivative product for the Australian investors trading and hedging in the Australian equity market. The ASX SPI 200 futures enable investors to capitalise the movements in the underlying S&P ASX 200 index. This allows them to get exposure to Australia's top 200 companies without having to buy or sell shares in every company in the underlying index. ASX SPI 200 futures has been approved for trading by the UK Financial Services Authority and also the US Commodity Futures Trading Commission, and the ASX SPI 200 futures, which is based on the S&P ASX 200 index, which is recognised as the benchmark for the Australian equities market and covers approximately 87% of the entire market capitalisation of listed companies in Australia. Some of the important features of this benchmark derivative product are that it trades for both day and nighttime trading sessions, providing access for almost 24 hours a day. The trading timings are 5 p.m. to 7 a.m. and 9:50 a.m. to 4:30 p.m. US Daylight Savings Time, and also 5 p.m. and 8 a.m. and 9:50 a.m. and 4:30 p.m. US non-Daylight Savings Time. Trading in ASX SPI 200 futures is available through international hubs, including London, Chicago, Singapore and Hong Kong. The ASX SPI 200 futures are available for the next 6 quarterly expiry months and along with the nearest 2 non-quarterly expiry months. Trading in the ASX SPI 200 futures is conducted on market via the electronic platform ASX Trade 24. However, it can also be traded off market through the block trade facility and the exchange for physical facility. Calendar spread trading functionality is also offered for ASX SPI 200 futures with attractive spread concessions. So why not trade on the ASX SPI 200 futures? Well, trading in the ASX SPI 200 futures provides many benefits to investors, which could help them to navigate through. Some of the benefits are liquidity in the contract. Now, liquidity is one of the main criteria that should be considered before investing in any security. Lower liquidity could make it difficult for the investors to enter and exit a position with ease. This is due to the impact cost that is incurred on every order. In a nutshell, lower the liquidity, higher would be the impact cost, and vice versa. Liquidity is determined by the volume of trading and being a derivative product of the benchmark index of Australia. The ASX SPI 200 futures is quite decent. There is efficient price discovery. The price discovery is simply the act of how efficiently a commonly accepted price for a security could be determined. Because the price of a futures contract is based on the forces of demand and supply, which is the net result for instant dissemination of all the available news and information, the price discovery becomes instant. There are lower brokerage fees. The brokerage fees for trading in the ASX SPI 200 futures is generally lower than when trading in each of the underlying securities. To put it very simply, with the brokerage fee of one product, an investor gets the exposure of 200 securities in the same proportion as the underlying S&P ASX 200 index. There is a reduction of counterparty risk. As it is a futures contract, the counterparty risk of a default is almost negligible. The clearing and settlement system takes care of this by collecting upfront margin from both the parties, that's the buyer and the seller. There is also leverage. The ASX SPI 200 futures is a leverage product, which simply means an investor can pay a part of the entire contract value of the futures contract to buy or short sell. This essentially increases the return on capital deployed. However, leveraged is like a two-sided sword. If it amplifies the potential return, it also amplifies the risk. Now, if you like this information, please like, share and comment on the video and subscribe to our YouTube channel. Press the bell icon for notifications for our latest videos. For regular updates and more information, log on to our website, kalkinemedia.com. I'm Rachel, signing off for Kalkinemedia.